Welcome to TalkTickers.
Glad to be here.
Today we're diving into the CMS Energy Q1 2025 earnings call.
Yep, fresh off the press.
Our goal, as always, is to cut through the jargon and pull out the insights you, as an experienced investor, really need.
Absolutely. Let's get straight to the numbers. Q1 adjusted EPS came in at $1.02.
$1.02. How does that compare?
It's a decent step up from Q1 last year.
Okay. What drove that improvement?
Well, mostly it was more normal winter weather in Michigan this year. You might remember last year was unusually mild.
Right. That makes sense for a utility. Anything else?
Yeah, also the positive impact from rate relief, net of their investments, that started kicking in.
Got it. So a fairly positive start overall then?
Generally, yes, but there was a big caveat in the quarter.
You must mean the storms. I heard they were pretty bad.
Exactly. Late March, early April, they called them historic. We're talking multiple tornadoes, high winds.
Ouch. And the cost.
Preliminary estimate is around $100 million in O&M expenses. So not insignificant.
$100 million. Wow. That must put pressure on the guidance, surely.
You'd think so, but no. They actually reaffirmed their full year 2025 EPS guidance.
Still the $3.54 to $3.60 range.
That's the one. And they even said they're feeling confident about hitting the higher end of that range.
Maintaining guidance despite a $100 million hit. That's surprising.
It is. And they also kept their long-term adjusted EPS growth target unchanged, still aiming for the high end of 6% to 8%.
Okay, so how are they managing that? What gives them the confidence?
Well, a few things. First off, the regulatory situation in Michigan seems pretty constructive for them right now.
Constructive how?
They got an electric rate order back in March, secured about 65% of what they asked for in their revised request.
65%, okay.
And importantly, it includes an increased investment recovery mechanism.
So they can recoup their infrastructure spending more effectively?
Exactly. That helps a lot with financial stability and funding future projects.
Makes sense. What about the gas side?
On the gas rate case, the initial staff testimony is seen as, well, a decent starting point. They sound open to settling.
Have they settled before?
Yeah, they mentioned they've successfully settled the last 4 gas cases, so there's a track record there.
Okay. And any other regulatory milestones coming up?
We're expecting the Renewable Energy Plan, or REP, order around mid-September this year.
And that feeds into?
That'll inform their 2026 Integrated Resource Plan, the IRP. That's their long-term roadmap for meeting energy needs.
Right. So a supportive regulatory backdrop is definitely helping them absorb shocks.
Seems to be a major factor, yes.
Let's go back to those storms. $100 million is a big number. How did they handle the actual event and the financial fallout?
Well, they stressed they were prepared, pre-staged crews, that sort of thing.
So the response was quick?
Apparently so. They highlighted a rapid restoration effort, which they said got positive feedback from customers and policymakers.
Okay, good PR there. But the cost, how are they accounting for it?
They filed for deferred accounting treatment for that $100 million. Basically, asking to spread the cost recognition over time instead of taking the full hit at once.
Okay, that helps smooth things out. But they must be cutting costs elsewhere, too.
Oh, absolutely. They specifically mentioned countermeasures.
Like what?
Things like limiting hiring, pulling back on consultants and contractors, cutting out discretionary spending.
Standard belt-tightening measures.
Pretty much. Plus, they expect more productivity gains from their internal lean operating system. They call it the CE way.
Right, the CE way. Okay, let's shift gears a bit. There was some buzz about economic development.
Yeah, quite a bit, actually. Their pipeline for new projects has apparently grown to 9 gigawatts just since the start of the year.
9 gigawatts, that's substantial growth. What kind of projects?
Well, here's the interesting part. About 65% of that pipeline is now geared towards data centers.
Data centers, why the sudden surge?
It seems directly linked to recent Michigan legislation that eliminated sales and used taxes for data centers.
Policy driving investment. Makes sense.
Definitely. And CMS has responded by filing a specific data center tariff with the commission.
Trying to make it attractive for those centers while protecting existing customers, I assume.
That's the line, yes. They think it's a good opportunity without burdening the current rate base.
Any other growth areas?
They also mentioned manufacturing growth in the pipeline, expecting sort of secondary benefits from that too.
Okay, so multiple drivers there. Let's quickly touch on the financial performance drivers for Q1 again, just to be clear.
Sure. So the positive variance compared to last year was mainly that normal winter weather we talked about.
Right.
And the rate relief kicking in from past electric and gas cases, plus ongoing renewable projects contributing.
Got it. Were there any offsets?
Yeah, some partially offsetting factors, higher O&M costs, partly from planned spending on electric grid reliability,
Okay.
and also some timing issues at their Norstar DH facility.
Speaking of Norstar, their non-regulated arm, how's that performing? What's the outlook?
The 2025 guidance for Norstar is $0.18 to $0.22 per share.
So a relatively small piece of the overall EPS pie.
Exactly. Most of that's expected from ongoing assets. They do have 2 solar projects slated to come online later this year.
Have they done anything to de-risk those projects?
Yeah.
Renewables can be tricky sometimes.
They mentioned steps taken, yeah. Securing contracts that have built-in price escalators, which helps protect against inflation.
Smart.
And they've apparently locked in their solar panel supplies through 2030. So supply chain security there.
Okay. So summing up the outlook then. Reaffirm guidance, managing storm costs, constructive regulation, data center growth. Sounds like they're feeling reasonably confident.
That's definitely the message they projected. They emphasized a conservative approach to planning.
And the diverse service territory probably helps. Less reliance on, say, the auto industry.
Yes, they pointed that out as a buffer against, potential economic wobbles. Minimal exposure to autos specifically.
What about broader policy, like the Inflation Reduction Act? Any impact there?
They're watching it, of course. But they seem to feel Michigan's existing energy laws give them enough flexibility to hit their clean energy targets regardless of federal changes right now.
Okay. That paints a pretty clear picture.
I think so. Resilience despite headwinds seems to be the theme.
All right. Let's move to our This Is Not Financial Advice segment. Based on all this, the resilience, the regulation, the data centers, any interesting trade ideas come to mind, keeping in mind purely speculative?
Okay, purely speculative, of course. Well, given CMS's stability, that reaffirmed guidance, and this potentially significant data center tailwind in Michigan, you could think about a relative value play within the utility sector, maybe a long position in CMS Energy.
Paired with
a short position in, say, another utility, perhaps one operating in a less supportive, maybe more unpredictable regulatory state.
Okay.
And maybe one with heavier exposure to more cyclical sectors, or perhaps facing tougher economic conditions in its territory, or more weather dependency without the same apparent buffers.
So the rationale is CMS's relative strength and growth outlook versus a potentially weaker peer.
Kind of like a barbell approach, yeah.
Yeah.
You're betting on CMS's resilience and specific growth drivers like data centers, possibly funded by tax changes, against a utility facing maybe more headwinds or regulatory uncertainty.
Interesting angle. Capturing that divergence.
But again, highly speculative. Needs a ton of research on both sides of that trade. Understand all the risks involved.
Absolutely. Conduct your own thorough research. This is just an idea to mull over.
Precisely.
Okay, that wraps up our deep dive into the CMS Energy Q1 2025 earnings call. We've hit the key results, the storm impact, the regulatory picture, and that interesting data center angle.
Hopefully we've distilled the crucial takeaways for you.
Remember, everything discussed here is for informational purposes. It is definitely not financial advice. We encourage you to continue the conversation online and share your own thoughts.
Thanks for tuning in.
We'll be back soon with another TalkTickers earnings deep dive.